एक बार स्क्रीन खोल के चेक कर।
हाँ
लाइट के वो देखो
किससे चल रहा है?
छोड़ो थोड़ा सा, एक मिनट।
क्वालिटी अच्छी नहीं मेरा क्वालिटी
ये लाइट नो देखायचं नाही तेवढा को कोईची बात सुची
आवाज पूरा
हाँ चल समझ में आ जाएगा दिख रहा है पूरा
ध्यान से देखना। So far as CBSE is concerned, accounting for share capital consists of 1 mark questions. There will be 3 questions compulsory. 1 is optional. So total you'll be getting 4 questions, out of which 3 is compulsory, 1 is optional. 3 marks questions will be 1, 4 mark questions will be 1, and 6 marks question will be 1. In total, share capital and debenture will comply of 24 marks. ISC is concerned, ISC I think it is 30 marks. Only share capital and debentures. You have additional chapters, that is redemption of debentures is also there, so you have to go through it also, right? When we are talking about share, the share is related to company form of business. So when the business is small, we used to manage with sole proprietorship. When the business grows, we go for partnership, and subsequently when the organizations grow larger, at that time we prefer company form of business. Company form of business, we need huge sum of money, and at that time we prefer to go for issuing shares, right? So what is share? First let us understand what is share capital. Suppose a large company, they want to raise say 10 lakh rupees. I'm trying to make it easy with a small amount, say 10 lakh rupees, and they need, suppose this is the total amount they require to start the business or to organize the business. Now it is their plan that we will share 80,000 among the people, right? So what they will do, they will not ask individually, instead they will divide this money among in small parts. Say they have divided into 800 parts, 800 parts of 100 rupees each, 800 parts of 100 rupees each, right? So what will happen when these 800 parts 100 rupees each will be shared or will be subscribed by the people, the company can accumulate 80,000 rupees, right? So this 80,000 rupees, that is known as share capital, and the holder of these 800 shares, they are known as shareholders, right? So two concepts, one is share capital. I see share capital, share and share capital and shareholder. 3 things: share, share capital and shareholder. Share means the total amount divided into small units of equal denomination. The total amount divided into small units of equal denomination. Remember, I am talking about equal denomination. Equal denominations, the value of each share will be same. The total amount divided into same equal denomination, a small equal denomination, is known as share. So, if a company is registered, by now you must have gone through all these things. That is why I am not explaining in detail. The total capital, suppose it is 10 lakh rupees, divided into 10,000 part. Each part is 100 rupees. So this 10,000 part is known as number of shares. This 10 lakh rupees is the share capital, and this 100 rupees is the nominal value or face value of each share. Nominal value or face value of each share, right? So the total amount raised by issuing share is known as share capital, and the holder of each share is known as shareholder. Shareholder are the owner of the company. Remember, they are the real owner. They are the owner of the company. So what the company is doing? The company is sharing the ownership among the people. The company is sharing the ownership among the people, right? So share means the total amount divided into small units of equal denomination. Share capital means the total amount raised by issuing shares, and shareholder means the holder of the share. They are the real owner of the company. They enjoy the voting right, right? And they participate directly or indirectly in the business also, right? So this is what the broad idea about the shares. Now, as we know that shares can be issued, shares can be issued at par. At par means, what is at par? When the nominal value and issue price are same. When the nominal value and issue price is same, that is what issue of shares at par. Say, do you know what are the different types of share? There are two types of shares. One is preference shares and other is equity share. Preferably when we are writing the entries, if nothing, if not written anything, we assume that it is equity share. But try to manage time, manage your time and write equity share or preference shares. But if you are not writing it and if there is some preference shares are there, remember it is very essential that you should write preference shares. The preference word should be prefixed, very important, right? In order to distinguish it in the preferences and equity share, right? So shares can be issued at par. Par means when the nominal value is equal to the issue price. Suppose nominal value is 100 and the company is issuing the shares at 100. That means this is par. So when I'm talking about issue of shares, do you know how the shares are issued? The shares are issued through stock exchanges if they are listed, by giving sufficient ads. Print media is there, hoardings are there. So by giving ads through bankers, we can issue the shares, right? So if the nominal value and issue price both are same, that is known as issue of shares at par, right? Secondly, if the nominal value is less than the issue price, suppose nominal value is 100 and issue price is 110, that is known as issued at premium, or we can say above par. Issued at premium, or we can say issued above par. Shares cannot be issued at discount. Previously we used to, but after the amendments of 2013, it has been forbidden that shares cannot be issued at discount. However, we can issue the shares at a discounted price to the employees, that is sweat equity, but it should not be less than the nominal value. It can be less than the market value, issue price, but should not be less than the nominal value. For example, suppose to the general public we are issuing the shares for 110, but we can issue it for 108 to the employees of the company. That is sweat equity. It is possible, but in normal way, shares cannot be issued at discount like debentures. So the issue price should not be less than the nominal value. Is it clear? Okay. Now, issue of shares, I hope you must be knowing. Issue of shares at par, premium, I hope you know. Still then I am telling the journal entries. When, say, for example, shares can be issued for cash. Shares can be issued for cash. Secondly, shares can be issued for consideration for consideration other than cash. Other than cash means shares can be issued to promoters. Shares can be issued to promoters. Share can be issued to underwriters. Shares can be issued to for purchase of assets, that is vendors, and shares can be issued for purchase of running business. We'll discuss it. Right? Shares can be issued to promoters, share can be issued to underwriters, shares can be issued for purchase of assets, and share can be issued for purchase of running business. So shares can be issued for cash or for consideration other than cash. Secondly, Secondly, shares can be issued in lump sum. In lump sum means the entire money will be collected in one go. The entire money will be collected in one go. एक ही साथ पूरा पैसा देना, right? Or it can be issued in installment. In installment means phase wise or in small fragments. That is to be decided by the company. You need not to go through it, right? So shares can be issued at par, shares can be issued at premium, shares can be issued for cash, shares can be issued for concession other than cash, or shares can be issued in lump sum, or it can be issued in installments. So let us discuss individually each and every aspect. Now let us start with an example. Suppose ACL Limited issued say 2000 shares, 2000 equity share of rupees 100 each, 100 each payable. There are two cases, which one in lump sum and second one in installment. In installment as rupees 40 on application. There is certain restrictions. Remember that application money should not be less than 25% of the issue nominal value. It should not be less than 25%, right? Secondly, on application, rupees 20 on allotment, rupees 30 on first call. It will be given in the questions, you need not to worry, and 10 on second and final call. Those who have not written the journal entries, write down. So when the shares are issued at par, shares are issued at par. First case it is issued in lump sum, and secondly it is issued in installments. So when it is issued in lump sum, the entry will be for application money received. This will be the narration. For application money received, the narration, the entry will be bank account debited. Bank account debited. You write down bank account debited to share application and allotment account. If it is preference share, you have to write preference share application and allotment account. And since nothing is given, we have written application and allotment account. It is implied that is the equity share. So first entry will be bank account debited to share application and allotment account. Bank account debited to share application and allotment account. And second one, for transfer of application money, the entry will be share application and allotment account debited. Share application and allotment account debited to share capital account. Share application and allotment account debited to share capital account. Right. Thereafter, this is the in when you will receive it in lump sum. We will receive in lump one go. That's 2000 into 100. 2 lakh rupees we will receive in one go. Bank account debited to share application and allotment account. 2 lakh rupees. And when we will transfer it, share application and allotment account debited to share capital 2 lakh rupees. Right. Secondly, if it is issued in installments. Here I have given 4 installments: application, allotment, first call and final call. You may have 2 or 3 installments also. only application and allotment, or application, allotment and first call also. Right? Now see, when application money is received, on application money received, the entry will be bank account debited to share application account 2000 into 40, that is 80,000 rupees. Bank account debited to share application account 2000 into 40, that is 80,000 rupees. Then for transfer of application money, share application account debited to share capital 80,000. Next, for share allotment due, the entry will be share allotment account debited to share capital account, share allotment account debited to share capital account 2000 into 20, that is 40,000. Then for transfer of allotment money, the entry will be share allotment account debited to share capital, that is 40,000. Then for first call due, share first call account debited to share capital, share first call account debited to share capital 2000 into 30. And thereafter, for first call money received, bank account debited to share first call account, bank account debited to share first call 2000 into 30, that is 60,000. And the last one, for share second and final call due, it will be bank account share second and final call account debit, share second and final call account debited to share capital, and for final call money received, the entry will be bank account debited to share second and final call account. So very important part is that we have to understand the journal entries. Please don't mug up. When we are writing bank account debited to share application or share allotment, what it may be, bank being the asset, that is why it has been debited. Assets by default always debit. Increase, in case of increase, there will be again debited. Share capital is a liability, and by nature it is a personal account. Share capital is a liability, that is why it has been credited. So you go through the journal entries and learn it, but don't mug up. And try to understand it, why it has been debited or credited. So this is all when we issue the shares at par. When I'm talking about shares issued at par, it can be done also while purchasing assets. We'll do it later on. Now in the second aspect, issue of shares at premium. Shares can be issued at premium. Premium means when the shares are issued at a price higher than the nominal value. Right? So if the shares are issued at a price higher than the nominal value, that is known as issued at par. The same questions may continue. 2000 equity shares, 100 rupees each. Sometime the question may instruct you or give directly that the shares are issued at premium, but there is every possibility that you may have to decipher it. You may have to find it out that whether the premium is there or not. Suppose it is given that 2000 equity shares of 100 each were issued at 10% premium. It is possible. It is in clear term given that is issued at a 10% premium. But instead of giving this one, the question may say that issued at 40 rupees at the time of application, 30 rupees at the time of allotment, 20 rupees at the time of first call, and 20 rupees at the time of second and final call. If the question is not there, suppose this is not there, but the question says in this way, so don't take risk. First you add it up and say the nominal value is 100, but we are issuing it at 110, 40 plus 30 plus 20 plus 20. Means it is implied that we are issuing the shares at a premium of 10 rupees. It is implied. So as we know that the question is silent that whether the premium is collected in which stage, application, allotment, first call or final call, because the premium can be collected anywhere. But if the question is silent, it is implied that it is collected at the time of allotment. So this 30 rupees consists of 20 towards capital and 10 towards premium. Is it clear? If nothing is given, we have to presume that the premium is collected at the time of allotment. It may be given directly as it was given, or it may be given indirectly as this one. Right? Securities premium is a capital gain for the firm, but it has certain restrictions. The premium can be used for certain specific purpose. What are the purposes? The first one, the purpose is, first one, issuing bonus shares. The company can use the security premium amount to issue the bonus shares to the existing shareholders. The existing shareholders, as a mark of gratitude, the company can issue shares to the existing shareholders. That is bonus shares, and usually for the bonus shares they did not to pay anything. Right? So sometimes you may have the questions in the later chapters. There is a chapter cash flow statement. They will get it. Suppose the bonus share is given. The bonus shares are issued in the ratio 3:2. 3:2 means for every 3 equity shares, 2 shares are issued as bonus shares. जिसके पास 3 तो इक्विटी शेयर है, उसको 2 तो बोनस शेयर हम लोग दिए हुए हैं. Is it clear? Right? So equity, it can be issued as for issue of bonus shares. Secondly, it can be issued to write off capital losses, discount on issue of shares, debentures, preliminary expenses. This can be done. We can buy back the securities using the securities premium. It can be used, right? So if nothing is given here, we have to presume that the securities premium has been collected at the time of allotment, right? And secondly, we are now using some schools or some students, they are using securities premium reserve. Try to avoid it, though for the time being, it is not a mistake for the time being, for now. But avoid using securities premium reserve. Instead, you try to use securities premium only, right? So now I will write it. See, if it is issued in lump sum, 2000 equity shares of 100 rupees each were issued at 10% premium, were issued at 10% premium. 100 rupees each, 10% premium. So the issue price will be how much? 110. 10% of 100 rupees is equal to 10 rupees. So the total issue price will be 110. One more thing. We are very much conversant about using 10. And usually we know 10% means 10 rupees. That is our mindset. Sometime in the questions, it may be given instead of 100, suppose the question says it is 50 rupees. And it has been seen the student used to write 50 plus 10, 60 rupees. It's a common error, very common error. The students usually do it very often. It is in our mind that 10% means 10 rupees. It is given 50 rupees, nominal value is 50. So the premium should be how much? 5 rupees, not 10. But we have seen, it has been seen that the student used to write 60 rupees. Be careful. So here in this question, the nominal value is 100, issued at 10% premium, payable as this one, but the first one is, it is issued in lump sum, if lump sum. When the shares are issued in lump sum, the entry will be for application money received. Write down the entry if not written. Bank account debited. To share application and allotment account. Bank account debited to share application and allotment account. 2000 into 110. 2000 into 110, that is 2,20,000. Bank account debited to share application and allotment account, 2000 into 110. Next, for transfer of application money, the entry will be share application and allotment account debit, 2,20,000. To share capital, 2 lakh. To securities premium, 20,000. Try to avoid using the word preserve. And when the shares are issued in installment at the premium, as I told you, that assume that the premium is collected at the time of allotment. Here we will receive the application money first. Write down, for application money received. The entry will be bank account debited to share application account, 2000 into 40, that is 80,000 rupees. Then for transfer of application money, share application account debit, to share capital account, 80,000. Next, for allotment due, the entry will be share allotment account debit, debited, 2000 into 30. Don't write it that way, 2000 into 30. You just write 2030, that is 60,000 rupees. To share capital, 2000 into 20, that is 40,000. To securities premium, 2000 into 10, that is 20,000. Next, when we receive the allotment money, bank account debited to share allotment account. Again, if nothing is given, remember that you have to presume that the premium is collected at the time of allotment. Next one, for first call due, share first call account debited to share capital account. Share first call account debited to share capital account. 2000 into 20. Share first call account debited to share capital 2000 into 20. Then for first call money received. For first call money received, bank account debited. Bank account debited to share first call account. Next, for second and final call due, for share second and final call due, the entry will be share second and final call account debited, share second and final call account debited to share capital. Share second and final call account debited to share capital, that is 2000 into 20. And for second and final call money received, for share second and final call money received, the entry will be bank account debited to share second and final call account. Bank account debited to share second and final call account. All these, whatever we have discussed till now, it is when the shares are issued at par and premium and there is no under subscription or over subscription. There is no under subscription or over subscription, right? There is another term you might have heard. Calls in area. What is it? Calls in area. Sometimes what happens, the holder of the shares, they are unable to pay either allotment money or call money. Either allotment money or call money. That is what calls in area. Calls in area. Area means due but not yet received. But for the company, it is the amount due but not yet received from the shareholder. Right? So calls in areas is just like an asset for the company. And it is to be shown as a deduction in the notes to accounts from subscribed but not fully paid up capital. It is to be shown in the balance, in the notes to accounts while preparing the balance sheet as a deduction from subscribed but not paid up capital. Right? Calls in area. As per table F, the company has to pay F na A, no? As per table F, the company has to pay interest at the rate of, the company can charge at the rate of 10% per annum. In case of calls in area, the company has to charge interest at the rate of 10% per annum, provided if the article permits. Provided if the article permits. Right? Take it. Now you see the journal entries and how to deal with it. Suppose ABC Limited issued ABC Limited issued 2000 share equity shares of rupees 100 each of rupees 100 each payable as rupees 40 on application, rupees 30 on allotment, rupees 20 on first call, and rupees 10 on second and final call. You just note down the questions because I have to erase it. And it is given that the holder of 400 shares failed to pay allotment money. Holder of 400 shares failed to pay allotment money. Another holder of 100 share did not pay first call. You write down the question. Holder of 40 shares, 2000 shares issued, 100 rupees each, payable as 40 rupees on application, 30 on allotment, 20 on first call, and 10 on second and final call. So this is issued at par. Holder of 400 shares failed to pay allotment money, and holder of 100 shares did not pay first call. Note down the question. Now, first of all, for application money received, the entry will be bank account debited. Bank account debited to share application 2000 into 40, that is 80,000 rupees. Bank account debited to share application 2000 into 40, that is 80,000 rupees. Next, for transfer of application money, the entry will be share application account debited to share capital account. Next, for allotment money due, for share allotment money due, the entry will be bank account of share allotment account debited, to share capital account, share allotment account debit, that is 2000 into 30, 2000 into 30 to share capital account 60,000. Now the question says that holder of 400 shares, they are not paying allotment money. So what we can do, there are two options. Sometimes the questions may say there will be specific instructions will be there that pass necessary journal entries without opening calls in area account, or the question will be silent. If the question is silent, you can go for calls in area account. And if the question is specifically given that you should not open calls in area account, at that time we have to do the other entry. Now you see, if we start with calls in area account, in that case, we will receive how much? Bank account debited. Now you see, I was supposed to receive 60,000 and I am not receiving 400 into 30. In examination, you should not write in this way. Find out the net amount. 60,000 I was supposed to receive and I am not receiving 400 into 30. Calls in area account debit being an asset, it is debited. Calls in area account debit, that is 400 into 30. But you should not write in this way. 2, share allotment account. 2, share allotment account, that is 60,000. Bank account debited 60,000 minus 400 into 30. Calls in area account debited 400 into 30, which was supposed to be received but not yet received. 2, share allotment account 60,000 into 30. This entry will be passed if we are opening calls in area account. But suppose in the question it is specifically given that you should not open calls in area account. It will be given pass necessary journal entries without opening calls in area account. In that case, what we will do? The entry will be bank account debited, don't use calls in area, and here the amount will be how much? I was supposed to receive 60,000 and now I am not receiving 400 into 30. And here it will be how much? That is 12,000 and it will be 48,000. So if it is given in the questions without using calls in area account, you write the journal entries, write in this way. Right? If the question is silent about without opening calls in area account, if it is categorically given that you should not open calls in area account, in that case, write in this way: bank account debited to share allotment account and deduct the amount, net amount you have to write down. But if it is given or question is silent, then you can use the calls in area, bank account debited, calls in area account debited to share allotment. Parth, I think you understood it. Parth. Right? And one more thing. Now you go for the first call. Share first call. The entry will be share first call account debited. Share first call account debit. Share first call account debited to share capital account. Due entry 2000 into 20. You should not write in this way. Write the total figure, net figure. Those who have not paid the allotment money, because the question is given that holder of 400 shares, they are not paying the allotment money. It is implied that they have not paid the first call money also, unless and until some specific instruction is there. If it is categorically given that they have paid, fine. If nothing is given, you have to assume that they have not paid. Clear? So share first call account debited to share capital 2000 into 20 and 40,000. So when we receive bank account debit, I was supposed to receive 40,000. That holder of 400 shares, they are not paying, and one new holder is there, 100 shares, they are also not paying. I am writing this just to make you understand. You should not write in this way in the examination. I was supposed to receive 40,000. Holder of 400 shares, they are not paying first call money because they have not paid the allotment also. And holder of 100 shares, they are not paying the first call money. And if we open calls in area account debited, how much it is? 400 into 20 plus 100 into 20. 400 into 20 plus 100 into 20, 2. Share first call account. That is 40,000. I was supposed to receive 40,000. Holder of 400 shares, they have not paid the allotment. It is implied that they have not paid the first call also. And holder of 100 shares, they are not paying the first call. Calls in area account debited. This money, holder of 400 shares, they have not paid the allotment, first call, and holder of 100 shares, they have also not paid the first call. 2 share first call, that is 40,000 rupees. And if it is given in the question that calls in area account is not to be opened, in that case, you don't use this one. Simply we will write the amount 30,000 rupees. This minus this minus this. Bank account debited to share first call. Right? And once they have not paid the allotment money, he will not pay the first call unless and until it is given. And it is implied that they will not pay the second call as well. And the holder of 100 shares, those who have not paid the first call, implied that they have not paid the second call as well. जो allotment नहीं दिया है वो first call भी नहीं दिया होगा, second call भी नहीं दिया होगा, और जो first call नहीं दिया, it is implied that they have not paid the second call. Right? Now, the final call entry, share second and final call account debit. Share second and final call account debit. That is 2000 into 10. 2 share capital. How much it is? 20,000. Right. Then when we receive the money, bank account debit, I was supposed to receive 20,000. I will not receive 500 into 10. Bank account debited. Calls in area account debited. Two, share second and final call. Right? Holder of 400 shares, they have not paid the allotment, implied that they have not paid the calls. Holder of 100 shares, they have not paid the first call, means implied that they have not paid the second call. Okay? And calls in area will be shown as deduction from subscribed but not fully paid up while preparing the notes to accounts. Now suppose इसी question में it will be given that the holder of 400 shares, they have not paid the allotment money, they have not paid the first call also, and holder of 100 shares, they have not paid the first call, but they have paid the entire money with second call. 400 शेयर्स वाले अलॉटमेंट दिए नहीं है, फर्स्ट कॉल दिए नहीं है. होल्डर ऑफ 100 शेयर्स दे हैव नॉट पेड द फर्स्ट कॉल. ये दोनों पूरा का पूरा पैसा दिया का विद सेकंड कॉल. इफ अगर क्वेश्चन ऐसे होता तो क्या होगा? Had it been the questions like this, what would have been the treatment? At that time, the entry will be this is the due entry. When we will receive bank account debited 20,000 towards second call plus holder of 400 shares. Now they are paying allotment money and first call money, the arrear one, and holder of 100 shares, they are paying the first call money. This amount and this amount, it was placed under calls in area. Now they are paying it. Calls in area, previously we have treated it as an asset and hence debited. Now we have received it, so it is to be cancelled. So to calls in area account, how much? That is 400 into 50. 400 into 50, 20,000 plus 2,000, 22,000. To share second and final call 20,000. Right? And if we have not used calls in area, as we have discussed earlier, if we have not used, at that time, instead of writing calls in area, the entry will be to share allotment account, that is 400 into 30, this one, to share first call account, that is 500 into 20, 500 into 20, to share second and final call. $20,000. Right? Also in area, once again I'm saying it is the amount to be shown under the head in the notes to accounts by deducting for the subscribed but not fully paid up. Right? Now come to calls in advance. Calls in advance. Sometimes what happens, the shareholder, they used to pay the uncalled amount. The shareholder, they used to pay the uncalled amount in advance. The company receives the uncalled amount in advance from the shareholder. That is known as calls in advance. Sometimes the company, the shareholders, they used to pay the uncalled amount in advance and the company accepts it. That is known as calls in advance. As per table F, the company has to pay interest at the rate of 12% per annum against calls in advance. Right? 12% per annum against calls in advance. And calls in advance is to be shown under the head current liability and subhead other current liability. Right? It is to be shown under the head current liability and under the subhead other current liability. ठीक? Now see how it is to be treated. Again the same question, 2000 shares issued, 100 rupees each. The question says that holder of 300 shares paid 100 shares payable as rupees 40 on application, rupees 20 on allotment, ₹30 on first call, and rupees 10 on second and final call. And holder of 300 shares paid the call monies with allotment. Means with the allotment money they have paid the first call and second call as well. Allotment money तो दिया, plus वो लोग और क्या किया? Holder of 300 shares, they paid the first call money and second call money with allotment. Right? For application money due received, entry will be for application money received. The entry will be bank account debited to share application account. Bank account debited to share application, normal entry 2000 into 40. Bank account debited to share application 2000 into 40. That is 80,000. Then for transfer of application money, share application account debited to share capital. Note down the questions. 40 rupees on application, 20 on allotment, 30 on first call, and 10 on second and final call. Right? Then for share allotment due, share allotment account debited, share allotment account debit 2000 into 20. To share capital. Then for allotment money received. Again the same question. You may be asked not to open calls in advance account. It may be given in the question that without opening calls in advance account, or you may be allowed to open calls in advance account. So first, if we are allowed to mention calls in advance account. Now see, holder of 300 shares, they are paying the call monies, both first call and second call with allotment. Both first call and second call with allotment. Now see, entry. Allotment money received. Bank account debit. we are supposed to receive 2000 into 20, that is 40,000 rupees. But holder of 300 shares, they paid the first call money and second call money with allotment. You should not write in this way. Bank account debited 40,000 rupees we are supposed to receive, plus 300 into first call and second call we have received in advance. 2 calls in advance account, 300 into 40, that is 12,000. 2 share allotment account, 40,000. Calls in advance 12,000 we have received, and share allotment 40,000. But suppose it is given not to open calls in advance account. It may so happen that will be given in the questions not to open calls in advance account. At that time, the entry will be bank account debited 52,000 to share allotment account 40,000 to share first call account, that is 300 into 30, 9,000 to share second call account, 300 into 10. And you have to do this only when it is given that calls in advance account is not to be opened. When it is given that calls in advance account is not to be opened. Is it clear? When calls in advance is received at the time of allotment, holder of 300 shares, they paid the call monies with allotment, first call and second call with allotment. Right. Next, first call due. First call due, share first call account debited. Share first call account debit. 2 share capital. 2,000 into 30. Share first call account debit. 2 share capital. 2,000 into 30, and first call money received when we maintain calls in area account. Bank account debited 60,000 minus 300 into 30 we have already received. Calls in advance was our liability. We have credited it earlier. Now we are adjusting it. It has been appropriated. So cancel it. Calls in area account debit. That is 9,000. This one. 2 share first call account. $60,000. Right? But if the question says that not to open call, it will be calls in advance, no? Not here, it will be advance. But if the question says that not to open calls in advance account, means we have not mentioned it earlier. At that time, my entry was bank account debited, 2 share allotment, 2 share first call, 2 share second call. In that case, here the entry will be bank account debit 60,000 minus 9,000 to share first call 51,000. Right? Next one. For share second and final call due. For share second and final call due. For share second and final call due, the entry will be share second and final call account debit. That is 2000 into 10. 2 share capital. And when we will receive bank account debit 20,000 minus 310. Calls in advance account debit 300 into 10 to share second and final call. And if we have not maintained calls in advance account, the entry will be bank account debit 20,000 minus 3,000 to share second and final call 17,000. Calls in advance will be shown under the head current liabilities and subhead other current liabilities. And as per table F, company can pay interest at the rate of 12% per annum. ठीक है? यहाँ तक समझ में आ गया? Or any doubt? Keep on asking the doubts if you have. Okay? Issue of shares for consideration other than cash. As we have discussed earlier, shares can be issued for cash as well as for consideration other than cash. When we are talking about issue of share for consideration other than cash, shares can be issued to promoters. Shares can be issued to underwriters. To the vendor for purchase of assets, or again to the vendor for purchase of running business or the other company for purchase of running business. Right? To the promoters, to the underwriters, to the vendors, and for purchase of running business. We can issue the share for all these purposes. Right? So let us start with issuing share to the promoters. Write down. For issue of share to the promoters, first due entry, the entry will be incorporation expenses account debit to promoters account, incorporation expenses account debited to promoters account, and then for allotment of share to the promoters, the entry will be promoters account debited to share capital account. Incorporation expenses account debited to promoters account. This is the due entry, and when we allot the share to the promoters, the entry will be promoters account debited to share capital. Okay? The first one, issue of share to the promoters. Next one, issue of share to the underwriters. Underwriters means that the brokers who undertake to sell our shares or securities or bonds, etc. Right? So that we paid commission, and it may so happen that instead of paying the commission in cash, we have issued some shares. The due entry will be underwriting commission account debit, big expenses. Underwriting commission account debited to underwriter account. Underwriting commission account debited to underwriter's account. And when we will issue the shares, the entry will be underwriter's account debit to share capital account. Underwriting commission account debited to underwriter, and underwriter account while allotment the shares, for allotment of shares to the underwriter account debited to share capital. Third case, for issue of shares for purchase of assets. For issue of share for purchase of assets. Now see, suppose X Limited purchased machinery, say worth rupees 1,20,000 from Y Limited. X Limited paid 20,000 cash and for the balance issued equity shares of rupees 100 each at bit 1 par, bit 2 25% premium, and bit 3 15% premium. Right. So the entry will be first one. For purchase of assets, the entry will be first case. Machinery account debited. Machinery account debited being asset 1 lakh rupees, increase in asset. 2, we have paid cash account 1 lakh 20, cash account 20,000. 2, Y limited, the vendor, Y limited 1 lakh rupees. Now you see, we have to pay 1 lakh rupees to Y limited by issuing shares. And in the first case, it is given that shares are issued at par. Means nominal value is 100 and issue price is also 100. So I can say that to pay 100 rupees, number of shares issued 1. So to pay 1 lakh rupees, number of shares to be issued 1 by 100 into 1 lakh, that is 10,000 shares. One thousand shares. Nominal value is 100, issue price is also 100. So to pay 100 rupees, I have to issue 1 share. So to pay 1 lakh rupees, I have to issue 1,000 shares. Right? So at that time, the entry will be Y limited account debited to share capital 1,000 share, 100 rupees each. Don't write in this way. You have to write the full amount. Y limited account debited to share capital when shares are issued at par. Okay? Next case, issue of shares at 25% premium. Issue of shares at 25% premium. What does it mean? Nominal value of the share is 100 and we are issuing it at nominal value of the share is 100 and we are issuing it at 125. Right? Now you see. Nominal value 100 and issue price is 125 means to pay 125, number of shares issued is 1. To pay 125, number of shares issued is 1. So to pay 1 lakh, I have to issue 800 shares. If you have any doubt, keep on asking. किसी को कुछ भी अगर डाउट है पूछ लो. Till now, we are issuing the shares at a premium of 25%. Means if nominal value is 100 rupees, issue price is 125. If I owe you 125, I have to issue one share to you. Now we owe 1 lakh rupees to Y Limited, so we have to issue 800 shares in settlement of his dues. So the entry will be Y Limited account debited 1 lakh rupees to share capital account, that is 800 into 100. Don't write in this way, write the full amount, to securities premium account 800 into 25. Y Limited account debited to share capital account to securities premium account. Clear? And third one is we are issuing it at 15% premium, not 100, but no, not 25, it is 15%. Means nominal value is 100 and issue price is 115. So I can say that to pay 115, number of shares issued 1. So to pay 1 lakh rupees, I have to issue 1 by 115 into 1 lakh. It will be 869.56. Remember that shares cannot be issued in fraction, and neither you are allowed to round it off. So what we will do? Y Limited account debited 1 lakh rupees to share capital 869 into 100 to securities premium 869 into 15. Now there will be some difference, it will not tally, it will not agree. So the difference amount will be paid in cash to bank account. Write down balancing figure, the difference of debit and credit, it will be 65 rupees. This is the balancing figure. तो ये कर सकते हैं? ऐसे करते हैं, बोल करते हैं।
यार बोल दो ना, चैट में लिख दो टेकिंग ब्रेक फॉर 10 मिनट्स। चल बोलो ना, चल
So we have discussed about issue of shares for cash. So far as for consideration of the cash में हम लोग discuss क्या क्या किए? Issue of shares to the promoters, issue of shares to the underwriters, and issue of shares for purchase of assets. Right? Now, issue of share for purchase of running business. X Limited purchased the running business of Y Limited consisting of assets not specifically given, but it may so happen that you will be getting the specific questions that which assets have been taken. Assets worth rupees 2 lakh and liabilities rupees 30,000 for consideration of bit 1 rupees 1,70,000, bit 2 rupees 1,90,000, and bit 3 rupees 1,60,000, and the purchase consideration was paid by issue of equity shares, by issue of equity shares of rupees 100 each at par, by issue of equity shares of rupees 100 each at par. Right? Now you see, we have purchased assets worth rupees 2 lakh. We have taken the liabilities worth rupees 30,000. Means we are expected to pay 1,70,000 rupees to Y Limited. But there are 3 different cases are given. In the first case, we have to pay 1,70,000. In the second case, it is agreed that we will pay 1,90,000. And in the third case, it has been agreed to pay 1,60,000. Means in case 2, we are paying 20,000 more. And in the case 3, we are paying 10,000 less. Here we are gaining and here we are losing and here we are gaining. Right? Got it? So let us purchase it first. First entry. If the name of the assets are categorically given, it is alright. Otherwise, write down sundry assets account debit. Sundry assets account debited. Sundry assets account debited 2 lakh. To sundry liabilities account. Since the question is specifically not given, that is 1,70,000 to Y Limited. To Y Limited, that is 30,000. Sundry assets account debit being assets debited to sundry liabilities. To sundry liabilities 30,000 and to Y Limited 1,70,000 rupees. Next, now we are issuing the shares at 100 each. So the second entry will be Y Limited account debited to share capital account, Y limited account debited to share capital, that is 1,70,000. Right? First entry is sundry assets to share sundry liabilities to share capital Y limited, and second entry Y limited account debited to share capital. When we are paying exactly what is due, 1,70,000. Clear? In the second case, we are paying more. So when we are paying more, the difference amount treat it as goodwill. Goodwill account debited. The difference amount, how much it is? 20,000. This is balancing figure, mention it, and issue shares worth rupees 1,90,000. Right? In the third case, we are issuing only 1,60,000 worth of shares, means we are gaining. So the entry will be sundry assets account debit 2 lakh, to sundry liabilities 30,000, to capital reserve, that is again balancing figure 10,000, to Y limited, that is 1,60,000. And now allot the shares. Till now everything was fine. Now I'll start with oversubscription and undersubscription. Huh? क्या हुआ? क्या हुआ? तुम फोन किया? क्या मेरे से बात करने बात कर? नॉर्मल क्वेश्चन नहीं, ऐसे तो बैठा है ये। तुम क्लास में? अब तुम है? दिख तो नहीं रहा है? ओ see, what is under subscription? Under subscription means when number of applications received is less than number of shares issued. That is known as under subscription. In order to allot the shares, you are to receive minimum 90%, minimum 90% subscriptions you are expected to receive. Unless you receive 90% of the issued capital or shares, you cannot allot the shares or you cannot go for allotment. If the company fails to receive less than 90% application, it is mandatory on the part of the company to refund the money received within 15 days from the date of closure of the issue. Within 15 days from the date of closure of the issue. It is mandatory. While writing the questions, suppose a question is specifically given, though it is not expected, but it is given where you are receiving application subscription is less than 90%, and the mark allotted is 3 or 4 marks. So at that time, don't write that it is not possible to issue and leave it. Don't do it. Because in that case, we can say that the examiner wanted to know whether we know it or not, how to write the journal entries. Right? So, but so far as MCQs are concerned, remember, unless and until we receive 90% of the applied issued capital, we cannot go for allotment. Right? So, when number of applications received are less than the number of shares allotted issued, that is under subscription. Suppose, for example, we have issued 2000 shares, that is issued capital, and we have received 1900 applications. It is more than 90%. This is known as under subscription. This is known as under subscriptions when number of shares applied for is less than the number of shares issued. So what is to be done here? No extra treatment is required. When we pass the entry, instead of writing or instead of calculating on 2000 shares, carry on all the calculations on 1900 shares. Bank account debited to share application, 1900 into application money, share allotment to share capital, 1900 into application money, and so on. That is the only change. But when we are talking about oversubscription, yes, there is some calculations which you ought to learn how to do it. Right? Say. Oversubscription, very carefully देखना. एक चीज आप लोग सुने होंगे, प्रो राटा अलॉटमेंट. In case of oversubscription, only we can go for pro rata allotment. In case of oversubscription, only we can go for pro rata allotment. Right? What is pro rata allotment? Pro rata allotment means proportionate allotment. In case of pro rata allotment means it is also known as proportionate allotment. Right? करेंगे कैसे? देखो, the options available and how it works. ध्यान से देखना, very important. एकदम ध्यान से समझना. Suppose a company issued 10,000 shares. Applications received, 18,000 applications received. Right? 10,000 shares issued and 18,000 applications received, and we will go for pro rata allotment. We will go for pro rata allotment. Calculations जितना journal entry based है, जितना entries है share capital में, please understand how it is debited or credited instead of learning it or mugging it up. In examinations, you may be getting questions of different types, and most of the questions you have to write the journal entries, and unless and until you know the how to pass the entries, it is very difficult to score good marks. So far as accounts are concerned, you can think of 100, 100%, but it is possible only if you know the journal entries, because it may so happen that there are some students who used to learn the journal entries, don't learn it. Second thing, so far as pro rata allotment is concerned, you have to understand the calculations, very important, right? How it is to be calculated, and accordingly we have to treat the books in the books of accounts. Now say, क्या कर रहा है? गाली गलौज। So, what are the options available with the company? Options are, say this is applied and this is allotted, or I can say holder. Carefully समझना. First option, applications received for 10,000, they were allotted full, that is 10,000. Applied for 8,000, nil or rejected or sent letter of regrets. These are the wordings. Applied for 10,000, allotted 10,000. Applied for 8,000, nil or rejected or refunded or sent letter of credits. अब ये 10,000 को हम 10,000 लिखे हैं, it may be given 100%, meaning same, right? Option number 2. Again, I am saying that this is the decision of the company. You need not to do anything. Option 2, applied for 8,000. Applied for 8,000. Allotted 8,000. And applied for 6,000. Allotted 2,000, and lastly applied for 4,000, nil. Applied for 8, allotted 8, applied for 6, allotted 2, and applied for 4, allotted nil. In this case, the applicant for 6,000 shares, to whom we have allotted only 2,000 shares, but at the time of application, they must have given the application money on these 6,000 shares. While applying for 6,000 shares, they must have given the application money on 6,000 shares, because they were totally unaware that how many shares were issued. Right? So those who have applied for 6,000 shares, they were allotted 2,000 shares, and remaining 4,000 shares were refunded applications. Remaining 4,000 applications refunded. This is the second option. Third option, applied for 18,000 and allotted 10,000. Again the same thing. They have paid the application money on 18,000 shares, but they have given the application shares, only 10,000 shares were allotted. So in these two cases, in this one and in this one, the applicants, they paid excess money. The applicants, they paid excess money. And now we have to adjust that money. That is known as pro rata allotment or proportion allotment. Right? ट्रीटमेंट देखो, हम छोटा सा एग्जांपल लेके बता रहे, और जब तक नहीं समझ में आएगा तो बोलते रहना. इसको मारेंगे, बोल दो.
लड़का बनाएगा, मार दो. किसको बोलते हैं?
Now you see, for example, there is an applicant of 5,000 shares. The question says that shares allotted in the ratio of 2:1. Shares were allotted in the ratio of 2:1. When it is given in this way, shares allotted in the ratio of 2:1, it means applied for 2 shares, allotted 1 share. Applied for 2, allotted 1. First, let us understand this calculation. That will go for accounting. So, applied 2 shares, allotted 1 share. So, applied 1, allotted will be 1/2. So, applied 5,000, allotted 1/2 into 5,000. That is 2,500 shares. So I can say that those who have applied for 5,000 shares, they were allotted 2,500 shares. Clear? ये समझ में आया? ये कैलकुलेशन है. ठीक है? One more calculation you see. Number of shares issued. Number of shares issued 10,000. Number of applications received. Number of applications received, say 15,000, and shares were allotted in the ratio of 7:5. तो केयरफुल देखो, समझो. Number of shares issued 10,000, number of applications received 15,000, and shares were allotted in the ratio of 7:5. 7:5 means applied 7, allotted 5. Can you find out number of shares allotted? Find it out. When applied 7, allotted 5, and here we have received the applications 15,000, allotted will be how much? It will be 5/7 into 15,000, and this comes to 10714.28. But I have only 10,000 shares. So we cannot issue more than 10,000 shares. So this is wrong. So in that case, what we'll do? Now see, to allot 5 shares, applications required for 7 shares. To allot 5 shares, applications needed 7 to allot 10,000 shares. Applications needed will be 7 by 5 into 10,000, that is 14,000 applications. Means now I can say applied 14,000, allotted 10,000, and applied 1,000, that is out of 15, allotted nil. Or sometime in the questions it will be directly given how it has been allotted. This is a calculation of allotments, how the shares are allotted in case of pro rata allotment or proportional allotment. Now let us understand the calculations. Check. Now see. $10,000 shares issued, 12,000 applications received. Nominal value is say 10. In case 1 it is given amount was received in lump sum. And second one, ₹4 on application, ₹3 on allotment, and balance ₹3 on first and final call. I see in this case, hold applicant for 2,000 share, they must have paid this application money at the time of application. That excess money, 2,000 into 4, 8,000 rupees. If the question is silent, you can return it immediately or forthwith at the time of transfer of application money, or else we can use it up to allotment if the question is silent. Up to allotment, we can adjust it. But if the question is specifically given that you can adjust it towards allotment and call, and some surplus is left even after allotment, that excess money or surplus amount can be adjusted towards allotment, first call also, calls also, first call, second call. And if the question is silent, that excess application money will be refunded or to be adjusted or can be adjusted only up to allotment, right? तो ये जो भी applicants हैं, they must have given 2,000 into 4, 8,000 rupees at the time of application. We have allotted 10,000 shares. So at the time of allotment, we will ask them 10,000 into 3. आपको देना है 30,000 rupees. But he has already paid 2,000 into 4. दे चुका पहले. That money can be adjusted. Right? Calculation समझना बहुत carefully. अभी पार में है. पार का भी एंट्री बोल दे रहे. Therefore, I'll go for premium also. So listen carefully and try to understand how we are calculating. First case, when the amount was received in lump sum. When the amount is received in lump sum. Entry will be bank account debited, bank account debited to share application and allotment account. Bank account debited to share application and allotment account. $12,000 into 4, 48,000. Bank account debited to share application and allotment account, 12,000 into 4. 40,000. Then for transfer of application money, write down share application and allotment account debit. Since we have received the entire money in one go, Surendra Vishwal, now we are asking that why there is 869? Because the shares were allotted, we cannot issue the shares in fraction. At that time, the shares were issued, that is 1 lakh divided by 115 was there, I think. 1 lakh divided by 115, that is 869.56. And we cannot issue the shares in fraction. So complete shares, 869 shares were issued. Premium was 15 rupees. And that is why it is 869 into 15. Got it? So since here we are receiving the entire money in one go, the entry will be bank account debited. First entry, bank account debited to share application and allotment, 12,000 into 4. And the next entry for transfer entry, share application and allotment account debit, 12,000 into 4. To share capital account, 10,000 into 4. To bank account, 2,000 into 4. For the amount refunded, excess money received, against which we cannot allot any shares, that is to be refunded. Right? Lump sum I am saying, but none of you raised any question. The entry was wrong. When we receive the money in lump sum, the entry will be 12,000 into 10. When we receive the entry, bank account debited to share application and allotment, 12,000 into 10. And when we transfer the money, the entry will be share application and allotment account debit, 12,000 into 10. To share capital, 12,000 into 10. To bank, 2,000 into 10. The entire money was received in one go, that is in lump sum. And we have not allotted that anything against that 2,000 share. That is why we have to refund the money. Is it clear? Now, next one. When we receive the money in installment, first application money, you see the end treatment. When we receive 12,000 applications, remember the working should be very neatly done in order to work out the questions very carefully. So first of all, don't make any rough work, no rough work. It should be fairly drawn and you should write it very clearly. Right? So application money received. Application money received will be 12,000 into 4, that is 48,000. Then application money used 10,000 into 4 because we have allotted only 10,000 shares. Surplus 8,000. Here, if the question is silent, you have two options available. You can refund this amount forthwith, or you can adjust the amount towards allotment if the question is silent. So let us adjust it towards allotment. Allotment due. This is all working note. Allotment due is how much? 10,000 shares, 3 rupees each. So the amount receivable is 22,000. Amount receivable is 22,000. Right? ठीक है? Entry लिखो. Write down the entries. First, for application money received. For application money received, bank account debited to share application account 48,000. Bank account debited to share application account 48,000. Thereafter, for transfer of application money, the entry will be share application account debited to share capital account to share capital account 40,000 to share allotment account 8,000. Right. Thereafter, for share allotment due. For share allotment due. Write down. Share allotment account debited. Share allotment account debit. 10,000 into 3, 30,000. To share capital. Right. Then for allotment money received, I was supposed to receive 30,000. I have already received 8,000. So I will receive 22,000. Write down. For allotment money received, bank account debited. Bank account debited 22,000 Here we have already received 8,000 rupees. The calculation shows that receivable is 22. So bank account debited to share allotment 22,000. Right? Then for first and final call due. For first and final call due. Share first and final call account debited. Share first and final call account debited. To share capital. Share first and final call account debited to share capital. That is 10,000 into 4. 4 or 3? 3. 10,000 into 3. To share capital 30,000. And for final call money received. For final call money received. Bank account debit. To share first and final call. Okay. Clear? Now we have already done about the calls in aerial and calls in advance. इसमें थोड़ा चेंजेस देख लो क्या हो सकता है. ये समझ में आ गया आप लोग को? Understood it? This is the simple one. इसी क्वेश्चन को लेके करते थोड़ा सा ना. Now suppose it is given in this question. Holder of 200 shares did not pay allotment money. Wordings देखना. Holder of 200 shares did not pay first call money, allotment money. Carefully calculations karo. Holder is given. Start the calculation from holder. Now see, holder of 10,000 share applied for 12,000 shares. Right? Holder of 10,000 shares applied for 12,000 shares. So holder of 200 shares must have applied for 12,000 by 10,000 into 200. That is 240 shares. If holder is given, start from the holder. Now you see, holder of 10,000 shares, they've applied for 12,000 shares. So holder of 200 shares, unitary method. Holder of 200 shares, they must have applied for 240 shares. Right? Now how to work out? Now the application money received will be how much? 240 into 4. The same questions, continuing questions, previous one. 240 into 4. 960. Application money used 200 into 4, 800. Surplus is 160. Allotment due 200 into 3. And area amount will be 440 rupees. Is it clear? If holder is given, calculate the number of shares applied for, accordingly calculate the amount we have received, how much amount has been adjusted, and what is the area. Okay? Write down the entries for this part. First one, for application money received. For application money received, 12,000 into 4, that is 48,000. For application money received, 48,000. For transfer of application money, share application account debit, share application account debited, 48,000. To share capital account, to share capital account, 40,000. To share allotment account, to share allotment account, 8,000. Next, for share allotment due, for share allotment due, share allotment account debited, share allotment account debit, to share capital, share allotment account debited to share capital, 10,000 into 3, 30,000. I was supposed to receive 22,000. In the last calculation, we have already shown it. But here, the holder of 200 shares, they are not paying the allotment money. So the entry will be for allotment money received. The entry will be bank account debited. Bank account debited, $22,000 minus 440. Calls in area account debit. Calls in area account debit. 440 to share allotment account. $22,000. Next, for first and final call due, for first and final call due, write down share first and final call account debited. Share first and final call account debit 30,000. To share capital. Again the same thing, the holder of 200 shares, when they have not paid the allotment, it is implied that they have not paid the first call also. So the entry will be bank account debited, bank account debited 9,800 into 3, calls in area account debit, calls in area account debit 200 into 3 to share first and final call. Right. Now, suppose instead of holder, instead of holder, here is applicant. Applicant of, suppose it is given 300 shares. Did not pay allotment. Applicant of 300 shares did not pay allotment. Now I will do it. When it is given applicant, start from the applications. Applied for 12,000 shares, allotted 10,000 shares. Right? So applied for 300 shares, the allotment would be made for 10,000 by 12,000 into 300, that is 250 shares. Right? Now see, application money received 300 into 4. The only thing is this one, you have to know, you have to understand the calculation. The entries remain same, treatment remains same, only this calculation, that is important. Application money received 300 into 4, that is 1200 rupees. Application money used 250 into 4, 1000 rupees. Surplus is 200. Allotment due 250 into 3. So the area will be 550. इसी बात बोलो ना। राइट, राधिका बुक नहीं ली थी। The board examination is from 15th. It has already been decided by the CBSE. So far as ISC is concerned, it is on 14th or 13th, I think. It is already been issued. So far as last year's results is concerned, there are 5 people, those who have scored 100 out of 100, and more than 16 people that have scored more than 90. And apart from the hard work of the students, the teachers, a lion's share also goes to this book, Target. So I would like to request all the students that apart from other books, you should also go for this one by Dr. Vinod. It is one of the very nice book and very competitive questions are there. But the most important part, the part is that your concept should be very clear. Other you cannot attempt the questions. Very nice questions. Both short questions and long questions are there, properly worked, and you can understand it very easily. But if you want to score good marks, you have to work out all the questions. No skip, nothing, not a single question is to be skipped. Previous years we have already enjoyed the benefit, and this year we are also expecting the same. So I would like to request all of you that apart from the other books, do it. Then we will do the remaining part on Sunday. Right? And if possible on Saturday by giving prior notice. Thank you. कल एंड करना है